This is Bruce Whitfield's Business Week. Bank better with Business Week and Capitec, the business bank for everyone. It's business without the boring bits.
Capitec is an authorized FSP 4669.
Every week we share just what you need to know to help you understand and better navigate the deeply complex, confusing and uncertain world around us. This week, should you be investing like a billionaire? We'll talk to the South African startup that was created because the founder was sick of warm drinks on his picnics, and why the rand is looking perkier even though you might not be feeling it. Time now for the Brutal Biz quiz, and this one's slightly left-paced. It's a bit odd, but it's one that amuses me, so you're getting it as a question. What is a kocheleffel? What is a kocheleffel? It's a Yiddish word. I was accused today of being a kocheleffel. Answer in a bit. What's a kocheleffel? Ahmed Aref is the deputy editor at News 24, and a really weird story this week, and I think one that is part of a bigger geopolitical flux that we are in the midst of at the moment, and that was that Taiwan imposed some very tough restrictions on our ability to import microchips, which of course are so important for all the vehicle manufacturers in South Africa, Ahmed, and then suddenly they changed their minds. What's the backstory there?
There's been a lot of back and forth. We're not really privy to what actually was discussed, but it does seem like DIRCO and TTIC had some role in trying to smooth things over. I mean, it was literally 2 days. They announced that they were going to have stricter restrictions on chip exports, and 2 days later, they dropped it. It's entirely possible that TTIC and DIRCO and the government, by and large, came to the table by saying, hey, we've got platinum, we've got palladium, you probably need some of that to actually make your chips. But it's also possible that there could have been some meetings that happened that we are not exactly privy to just yet. But who knows, we're probably going to expect some more information on this to come out in the next couple of days.
Taiwan, of course, is absolutely critical to the global, they call it the semiconductor industry, the little chips you never think about but make our world turn. They're absolutely pivotal. And of course, Taiwan very much in the beady eye of China, which has not ruled out perhaps doing a Russia-Ukraine on Taiwan and taking it over if it feels the compunction to do so. Taiwan itself is a fairly vulnerable state in a very flexible and fluctuating world right now.
Yeah, look, there's a lot of political ramifications of China. Their belief that Taiwan forms part of their larger empire, there's Tibet and stuff like that. And we have a very interesting relationship with China. We partners with them on BRICS. As far as I understand, they're our second biggest market to export after the US. The role that Taiwan plays is going to be very important going forward, and how this battle for these tiny microchips play out in the global space. They're the largest producer of semiconductor chips in the world, and they have the biggest manufacturing company in the world. They're Taiwan Semiconductor Manufacturing Company, and all electronics need these chips. The US itself has kind of slacked of late in terms of being able to produce some of that. Intel itself actually wants to push into that space, and they're looking to make Intel great again. It might work, might not work, but it is a very interesting geopolitical space in which to play. And our relationship with China is going to be affected, just like how our relationship with Russia is affected as well, and how we kind of show up on the world stage. It's going to be big. I don't know.
What is our official relationship with Taiwan? Because I remember, and I must have read tens of thousands of news bulletins in my time as a news editor, and I remember Christmas time-ish of 1997, it was quiet as anything, and a little story came through on what used to be called the South African Press Association Wire in those days, giving away my age a little bit. But it was Christmas time, and it was South Africa cuts diplomatic ties with Taiwan and teams up with China. And I ran a headline that said, China is our new best friend. And it was really prescient, I think, because over time, of course, China's dominance in the world has come to bear. The BRICS relationship, for whatever value that brings to us, has come to bear as well. And Taiwan has shifted into the background quite a lot, even though actually, as an industrial player, it's critical.
This specifically started now recently with the South African government effectively choosing to not recognize Taiwan. Part of what they did was they said, you have these missions in Cape Town and Pretoria. We're not going to recognize them anymore. And obviously that's a big deal for Taiwan because we do actual trade with them, And, wading into this, I think China is essentially going to be the next superpower. And we're in a battle between two superpowers who are now trying to keep us in the middle of a big trade war. I don't know how it's going to play out. I mean, we've clearly chosen sides. Part of the fact that we now have these 30% tariffs with the US, we're looking to other markets. And I mean, part of who we're looking to are these BRICS players we've sided ourselves with, I mean, it's not just microchips, it's where to sell our fruit and veg, where to send our robots, stuff like that, And it's decisions that we're going to have to make and that impacts our companies here and our farmers here.
Ahmed Aref, the deputy editor at News 24, South Africa and its alignments, political and social and otherwise, absolutely critical. Certainly the biggest story of the week is how this one plays out as Parks Tau, the Minister of Trade, talking about AGOA might still be a thing. Anyway, we are hedging our bets as best we can as a country, as a taker rather than a big game maker at the moment. There's a theory, and often it holds true, that you should invest your money where billionaires do. Elon Musk, for example, has got a huge exposure to Tesla. He doesn't want to lose money, so maybe buy Tesla shares. That's all well and good, of course. If Tesla's value drops by 90%, Elon Musk can still pay school fees. Could you keep paying school fees? But that's an aside. I like looking at Remgro. It's an investment company listed on the JSE because it gives you a sense as to what the Ruperts are doing with their money. Remgro is controlled by the Ruperts, and Yanni Durant is the chief executive of Remgro, which is their South African investment vehicle. And I suppose one of the biggest stories over the last while, Yanni, has been selling out of British American tobacco. Was it an emotive call at all, considering that the entire Rupert empire was built off the back of tobacco and cigarettes out of Stellenbosch all those years ago?
Yeah, Bruce, I don't think for us it was an emotive call because as Remgro, we've really exited the tobacco business already in 2008. So I think that emotions have expired. So that was probably the emotive date in 2008. So we just realized our little stake, about R1 billion that we've just sold after year end. And as you've probably seen, we've actually used that money to give the shareholders a specific windfall and declare a special dividend of R2 just as a last present out of the tobacco side for the shareholders.
By giving a special dividend, it does suggest that there are not too many other investment opportunities you see as being particularly valuable in South Africa at the moment. Is that the wrong reading?
I think that's the wrong reading because we've got enough cash on the balance sheet. You probably see that we've got a close between just over R8 billion of cash on the balance sheet. So if good opportunities present itself, we will have enough cash to follow them. That was it was probably a little token of the BAT stake, and we linked that specifically to the special dividend. And we still, as I said at the analyst presentation, we're open for business. We're looking for new investments. But as you rightly say, probably in the South African environment at this point with low growth and things, it's difficult to find the right ones at this point in time, I have to be frank.
Exactly right. There just is still so much political noise in the system. You've got investments that are regulated. You've got investments that rely on the Competition Commission, for example. The Competition Commission objected to your merger of your fiber assets with Vodacom. They've reneged a little bit and they've backed off for now. There does seem like you've got an agreement there, but I wonder how you cope with the regulatory environment, which is quite stringent, at least when it comes to public companies. It's very rigorous.
No, absolutely agree. I've actually vented myself quite a few times in the past. This deal took about 5 years to conclude. Been sitting in the ComCom, the tribunal, and then the appeals court for quite a while. Luckily, I must say, the court was quite effective. They delivered their judgment very quickly, so I must compliment on that. But yes, it's been a frustrating process, Bruce, absolutely. And so it makes what I always call the frictional cost in terms of doing these deals. Once you deal with the Competition Commission, I mean, the people that make money out of are the lawyers. And then actually the companies and the shareholders suffer. You pay for lawyers' fees, take time to implement. It's probably 3 years past when we should have been implemented. We could have passed so many homes in the mass market and actually deliver high-speed fiber, high-speed internet access to a lot of people, which is now 3 years behind.
And that's part of the frustration, of course, of doing business in South Africa, where you've got this regulation, you've got policy uncertainty as well, and we're still not out of the woods yet when it comes to NHI, government's big idea on health, national health insurance, which has seen such strong pushback against it. And it would seem that the risk is dissipating as the ANC loses support, and I suppose ultimately good news for Mediclinic, but not a guarantee, though, that we're still not going to see more noise, more restrictions, more difficulty in doing business in the private healthcare sector.
No, absolutely. I mean, the NHI, as we are totally against it. We're not against providing good quality healthcare to the population at all, but I think government should do it in a proper way, and then they're trying to really actually ruin an industry that has delivered about 8 million people good healthcare on the private side. So we're taking that monkey off their back. They don't have to provide, the taxpayer pay for itself. The people take out of their own pocket after tax, so it's not a burden on the state at all. So that state should really focus on actually upping their delivery for the people that can't afford private healthcare. So we're not against universal public healthcare. We just, the way they're doing this, totally unaffordable, we're thinking they're going the wrong way.
But in the private sector, there are extraordinary South African businesses. And we spoke to Outsurance on the podcast last week. You've got a big investment. It's probably one of your biggest profit contributors as Remgro at the moment. I think 29% of your profits come out of Outsurance. And increasingly, it's finding new markets offshore. That seems to be where you have to go nowadays to get that growth.
Absolutely. I mean, I've given kudos to Martinez and his team at Outsurance. I mean, they've done remarkably well. I mean, it's not many companies in South Africa that have been so successful in Australia.
Yes, exactly.
If you look through the past recent history, it's probably more failures than successes. So you must actually applaud them for that. Yeah, look at Mediclinic. Mediclinic started in 1984 in South Africa, and now it's where we get the biggest growth is in the Middle East. We're the biggest private hospital operator in the Middle East, of hospitals in Dubai, Abu Dhabi, and surrounding areas, and very, very successful. Yes, we're all aware of the struggles and the challenges we've got in Switzerland, but we're the biggest private hospital operator in Switzerland, and things are actually starting to turn around, albeit a bit slowly, but it's starting to turn around there as well. So we've actually, as Mediclinic, been successful outside South Africa as well.
That's kind of tragic, I suppose, in that that's where we're having to go for growth. And we see so many companies finding that as the only alternative. What is your view of the South African economy? So much work has been done by the private sector, supporting government, getting Transnet back on stream, helping Eskom come right, helping in so many respects. What's your sort of 5-year view of the South African economy?
I think we need growth, and we need growth desperately and ASAP. I mean, I think we're sitting here on a time bomb with unemployment, low growth. Of course, what happens in low growth environment, I mean, the pie is not getting bigger. The population is growing. So each and every person, actually, if you look at GDP per person, is actually people are getting poorer. And not that we're a specifically rich country. So I think we're sitting on a time bomb here, and we need to drastically address that. I think from our side, if you look at our companies, we've done well, but I mean, it's not because the economy is growing, because we're actually taking market share from other people. So the pie is not getting bigger. We're just getting a bigger pie of an existing pie. So it's our growing market share, but not because there's volume growth in the economy. We're seeing volume decline. I mean, I always say to people, look at your medical aid membership, and that's a very good indication of the growth of the economy. That's just been stable. But if you actually look through the numbers, the people are actually down buying cheaper products on medical aid. So it actually is a declining industry, medical aid, which should be a barometer for economic growth.
Jannie Durant, thank you very, very much indeed. A no-holds-barred assessment of SA Inc. at the moment. He's Chief Executive at Remgro. Well, I was paging through British Airways In-Flight magazine the other day, and among the things they said I should own is a Fieldbar. Lucky for me, I have one already. It's a South African-originated, fully built cold box created by a former IT exec by the name of Lee Hartman. He was bored of his drinks warming up as he picnicked in Kirstenbosch and at Clifton Beach, and it's a classic case of building a business that solves a problem with which you identify strongly. And it's been a long time, Lee Hartman, a year or 2 or 3, since I popped into your factory in Observatory. You've moved, you've upgraded, you've upscaled, and your production is going through the roof, quite literally, I think. Hello.
Hi, Bruce. Yes, we've now just recently moved factories. So we've got a new 5,000 square meter factory out in Montague Gardens. And hopefully that'll last us a few more years. It's now our 4th factory already.
It's astonishing. It's amazing how the scale of this thing has taken off from a simple idea, a simple annoyance, to the development. I think in your first version of the Fieldbar, 52 individual bits to try and keep ice frozen for 50 hours plus. And you've created and remained committed to building in South Africa. That decision to keep it 100% South African, how tough is that in quite a tough, I think, business environment?
Yeah, I mean, it's something that we strategically look at probably once a year. It is really important to us that we make our products in South Africa and that we create employment. We've now created 160 jobs in South Africa, which is something that everybody that's involved in Fieldbar is very proud of. You know, when we grow internationally, it's where you make your product it says a lot about your brand. We looked at the Le Creuset model as for guidance. You know, their core range is still made in France. And the owner's gone on record saying that he could get it made cheaper, you know, in the East, but he views it as essential to the brand as to where you come from and why you're good at what you do. So we will always look to keep manufacturing our core products here in South Africa.
It's interesting because we just chatted to Yanni Durant, who, in addition to being the chief executive of Remgro, is also the CEO of Venfin, which is a venture capital investment company, which has a stake in you. And we were just bemoaning about how few opportunities there are in South Africa for big, large investments. They've got 8 billion rand sitting on their balance sheet. They've provided you with some capital over the years. But it does seem like it's possibly easier in the startup world to be in South Africa than perhaps as a large corporation.
I think so. You know, maybe I'll give him a call and give him some ideas on that 8 billion rand. But I think for me, the realization is that South Africa, we need to stick to our strengths. You know, I don't think we're going to be good at making electronics. I don't think we're going to be good at AI. We just don't have enough of the skill set that's required for that. But what we are good at is I think we can make a lot of luxury products, you know, mostly by hand because they're highly crafted. They have to be. And I think that plays into our strengths, you know, traditionally where we're located. Yeah, so if we play to our strengths, I think we can create manufacturing jobs in South Africa.
And it's also interesting that it's a great testing ground as well, because before you took the Fieldbar global, you sold it extensively in South Africa. And it is a good place because you've got a really discerning market for luxury goods in South Africa. They demand the best, willing to pay a premium for it. And it's a useful place to see what does and does not work.
Yeah, it flies a little bit under the international radar, which gives us some time to get things right, you know, and as you said, to see how it resonates. You know, we always launch our products here first in South Africa, and we keep them, we don't ship them internationally for at least a year, while we're just trying to figure out how they've been received and if they need any improvements or any tweaks. So yeah, it's a great launch pad, I feel.
Talk to me then about your international markets, because Ahmed Aref, who's also on the podcast today, telling me about your tie-up with Microchip, which is making some of the handles for the Fieldbars now. He popped into the New York Microchip store last year, and your Fieldbar boxes are there. They're also in places like Harrods and other luxury outlets as well in other parts of the world.
Yeah, the international expansion has been going really nicely. You know, we are being conservative with how we approach it. You know, there are a lot of shipwrecks out there of South African companies going abroad. So we are conservative. What we did do very early on is open up in a lot of territory. So we're in Australia, Europe, the UK, and the USA. And basically, the strategy behind that was to see which markets naturally resonated with our products so that we didn't have to market too heavily and try and convince people that it's a good idea. And right now, the UK and the USA are showing incredible signs of just raw demand. The UK had an excellent Northern Hemisphere summer, and we've just signed up a really, really big retailer in the USA, which is going to start rolling out in March next year. So, yeah, we're making...
Which one? You can tell us. You can tell us, Lee.
No,
who have you signed up in the US? It is exciting, though, isn't it? Because quality does sell, and you have got a product which is unique in the world. I do remember talking to my publisher at the time of the Genius book, which is where I first came across you, and she was saying how lovely your design ethos was, and then she made the remark, well, they'll never work in Joburg because whoever takes 2 bottles of wine anywhere, you need something much, much bigger. And you've addressed that concern, I see on your website now, because you've created a big brother, a cousin, a sister, maybe it is, but a bigger version.
Yes, and that bigger version has just been incredible for us. It's been constantly out of stock. It's predominantly sold to people that already have exposure to Fieldbar. So our original Fieldbar, called the Drinks Box, creates a nice beachhead market, and we're seeing that in the UK as well. We sent our first gin trunks, which is the bigger cooler, to the UK, and they just sold incredibly well, which really surprised us. But a lot of it is because of the exposure that the smaller one gives you. And we actually was talking to somebody who received a Fieldbar as a gift, and he just said to me, he's surprised how much he uses it. That little one is very highly used, for cooler boxes. When we did our initial research, they were being used 2 to 3 times a year, and we're seeing that increase because of the size, because of the convenience of it, is getting used, 10, 12 times a year, which is great.
And you've got your distribution right. I mean, certainly in my experience, I sent a Fieldbar to rural Oxfordshire a little while back.
Okay.
A friend of mine had helped me out on something, and so I said, right, you need to get something unique, something you've never seen before. Here it comes. And this is a guy based near Clarkson's Farm, that sort of part of the world. You would think it's very well connected and very civilized, but it's country roads and dead ends and all sorts of hedges and hedgerows and stone walls and stuff. I placed an order. It was there in 2 days. I mean, and that, I suppose, is again the secret of getting this stuff right, because so many people come short in that they don't get the supply chains right. They don't have the right stock in place, and you can't carry too much, but you can't carry too little either. And that has been something of a scientific discovery, I would guess, on your part.
Yeah, I think the technology over the last 5-6 years in that area has really, grown leaps and bounds, and is a big enabler for companies like us. We use a third-party warehouse in all our territories, so we ship the stock there, and then people order on our site like you just did, and it's there within 2 to 3 days. And that's really important because it builds trust with potential buyers. They don't want to wait for stuff to be shipped from South Africa. It's too risky, too much can go wrong. So the technology of those third-party warehouses also means that we don't need distributors in these territories, so we do it all ourselves.
And that becomes a really important factor too. You've also resisted, and there was some pressure on you 2 or 3 years ago by some big brands that you might very well change the Fieldbar brand on some cases. There was one particular big store that said, well, we'll take, thousands of these things, but we have to put our own branding on them. And you refused. And I see on your website today, that store is carrying your Fieldbars with Fieldbar logos on it. Sometimes it pays to be bolshy.
Yeah, it does. I think you have to stick to what you hold dear. They did come back to us after quite a while, and they just said, I suspect that they looked at trying to source something similar from their supply chain, but they realized how difficult it is to make. And we're very proud of that. We're one of the very few external brands that they carry in their store. So it's a real acknowledgement of our products.
And how are you dealing with copycats? I would assume that your Fieldbars have been dismantled and people have at least considered doing copies. It happens from around the world.
Yeah, we're seeing some stuff on the very cheap end. They look terrible, and they're not really catching on. We haven't seen anything kind of trying to mimic us on the high end side, and I think part of that is some of the decisions that we made in the early days where we had to choose between a hard design path or an easy design path, and we chose the hard one because of the design that it would give us. But also, if it was hard for us, we knew it would be hard for others as well.
I think that's the smartest thing ever. Thank you very much to Lee Hartman. He is the founder and chief executive of the globally successful Fieldbar, made in Cape Town. Bruce Whitfield's Business Week, the podcast that respects your time and your intelligence. Our dedicated Business Week hotline, of course. WhatsApp us on 072 562 3179. Time for the brutal biz quiz, and the answer to our question earlier, what is a kocheleffel? It's a Yiddish word, as I said, and I was accused today of being one. So I had to do some research. If somebody's going to insult you, it's important to go to Google. Apparently from Bavarian dialects of Yiddish, and it literally means cooking spoon. A little bit of further research tells me in Yiddish culture, it's often a humorous, and this is where actually, or more slightly critical nickname, that's what was intended in my case, for a person who always wants to be involved in other people's business. A kochel lefel, somebody who wants to be involved, stick their nose into other people's business. Look, I'm going to take it. I'm going to own it. I'm Bruce Whitfield, and I am a kochel lefel, which is why I do this podcast.
Why pay more for business banking? Does your account come with a private jet, a 5-star lunch, a butler named James? Didn't think so. At Capitec, you get the same low fees as personal banking, so you always know what you get and what you pay. Open your account in minutes and save up to 50% on transaction fees. Visit capitecbank.co.za to get started. Capitec, the business bank for everyone. Capitec is an authorized FSP. 4669. Conditions apply.
Let's look at markets now. Dion Thos is the Chief Investment Officer at Credo. He is based in London. And I've been looking at international stock markets. I've been looking at the JSE. I've been trying to figure out, Dion Thos, what on earth is driving valuations, the way that valuations are being driven. S&P 500 coming off record highs. The JSE constantly testing record highs. London over 9,000 on the FTSE 100 index. And it just doesn't match up with the news I'm seeing on the front pages of all of the publications I'm looking at. Explain, please.
Yeah, that's $1 million question, Bruce, and I think I'm going to spend the whole afternoon debating what the possible answers are. But I think just in terms of a few summary points to consider, I think firstly there's just a weight of money that is still hitting the markets in terms of both institutional investors as well as retail investors. I saw something just the other day that there's something like $7 trillion just sitting in cash on the sidelines in money market funds, waiting for a time to get into the market for when, participants might think that it's good value. So that's one of the arguments. The second one, which I think has been very much in the news for months now, maybe for years, one can argue, is the movements around the Fed. And we, at last, after many months of anticipation, we got our first interest rate cut from the Fed a couple of weeks ago. And now the question is when the next one might come. And I think if it does come next month, which is, I wouldn't say it's widely anticipated, but it's certainly very possible. And then I think that will once again be bullish for markets, certainly the US market, but ultimately around the world. And then thirdly, there's this much hyped arguments around AI and what it means for all the big hyperscalers and the future of the world and productivity of companies across the board, which has been extremely exciting for a long time. And maybe more recently of concern because people realize that all this AI will take capacity that needs to be built and it's going to cost a lot of money and it needs to be funded. So that one's a bit of a double-edged sword and perhaps a slightly more interesting topic on which one can spend more time.
And also, the issue of AI and whether we're at the early stage of a hype cycle and whether we headed for a 1999, 2000 collapse in valuations, I'm not sure that we're necessarily going there based on some really interesting research about the fact that, yes, equities are at an all-time high, but so are profit margins. Companies are actually managing their businesses better, possibly than ever before, and maybe that is a more substantive reason to believe in what is happening to the value of money and the value of investments.
That's extremely valid, Bruce. A couple of points. Firstly, I think a lot of the much hyped companies and the really expensive companies at the time of the tech bubble were just dreams. They didn't actually make any money. And so they were obviously found out for that. If you look at the Mag 7 now, if you look at the top 10 companies in the world, they're extremely profitable companies that actually grow their revenues at higher than anticipated rates, on a essentially continuous basis. The question is how long that lasts. But the point that you make as well, when I started my investment career in the 1990s and when the textbooks were written that people use in the CFA, margins were at the 5-6% level. And 10 years later, after the tech crash, they went up to the 6% level. And then we had the financial crisis. It went up after that to sort of the 8% level. And today, thanks to technological advancements and the impact on productivity, they're north of 10% on average. That's the kind of numbers that one sees in this research. And of course, that therefore provides an underpin for higher valuations on a sustainable basis.
Does the politics and the rhetoric matter, therefore? You've got Donald Trump, for example, making noise around visas and making it more difficult for professionals to go and work in the United States, causing all kinds of panic, the whole trade war panic. It doesn't seem that is having any effect on the fundamental profitability and the ability of companies to keep operating and keep making decent profits.
Yeah, I think you're correct. I think politics certainly matters in the short term. When politicians make controversial statements or threats, that sort of thing, the market often overreacts in the short term, but then adjusts again to business fundamentals, once people have had time to sort of distill the facts. And your example about the expensive tech visas or the H-1B visas for immigrants in the States, when it comes to the people affected by that, most of those people will work for companies like Amazon and Meta and Alphabet. But frankly, even though $100,000 sounds like a lot of money, and it is a lot of money for me and for you and for most listeners, for those companies that have, multi-trillion-dollar market caps, they can appoint a few hundred of these people and they won't notice the impact. We saw famously a few months ago that Meta was offering AI engineers sign-on packages amounting to $100 million. So if you can afford $100 million to spend on one person who doesn't even play football, then an extra $100,000 for his visa hardly moves the dial.
Why then does it all feel so blimmin' uncertain? And can we afford to ignore the news flow and just keep on pumping money, throwing good money after good money?
Well, Bruce, I think, to be honest, I think it always feels uncertain. I think markets are only ever easy in hindsight. And we look back in history, those of us who've been around a while, and you explain things that happened, whether it was with the tech bubble or the global financial crisis or going through COVID or a multitude of wars and pandemics. And in hindsight, we understand what happened and we explain what happened, and it feels like it was easier then. But on any given day, when you're in the markets live, you are trying to, and for us who are fiduciaries of client money, you are trying to protect money, you're trying to grow money, you're trying to outperform the competition, you're trying to outperform the index, and all those things are difficult on any given day. So it's never really easy. It only feels easy in hindsight. And I think ultimately the key thing is to understand your own risk profile and to invest accordingly and to really ignore the noise, because most of the news flow, certainly the political news flow, most of it does boil down to noise over time.
Your host, the wise Chief Investment Officer at Credo in London. So where is the best place to invest money? I am a fan of unit trusts. I think when you get some clever people together and they think about the world more deeply than most, they invest your money on your behalf and you pay them a fee and hopefully you get a decent return. In some parts of the world, they're called managed funds. But certified financial planner Warren Ingram and I, who every week help you to develop this step-by-step guide to get financial freedom, we do it in less than 3 minutes a week. Just one action you need to take, and if you follow what we suggest, you will become, and we guarantee it, closer to financial freedom. This week, it's all about managed funds or unit trusts.
You were very generous to them, calling them the smartest people in the world. I think they tell us that they're the smartest people in the world, and some of them are, and some of them definitely aren't. Managed funds will have a few names around the world, depending on what market you're looking at. So sometimes they're called mutual funds, sometimes they're called unit trusts, sometimes they're called UCITS funds. And what's happening there is investors pool their money together. So you and I put our money together, and we can't go and create these pools of money on our own. So money gets allocated to something that's highly regulated. And that's the key point in these managed funds or mutual funds is assets are put together by investors, and that money is only owned by you and I. It's not owned by the company that's providing these things. So company ABC that, creates a mutual fund, if that company goes bankrupt, you and I are not affected by our assets disappearing along with their own money. Those assets are ours because that money has been pooled and it's been used to buy a range of different investments on our behalf. And the company that's providing that, all that they've done is they've made the investment decisions for us, but they're not allowed to go and put that money in their own bank account or pay themselves bonuses with our money. That money is separate from them. And Bruce, this world is really big. You could own a managed fund or a mutual fund that just invests in cash, just invests in property, just invests in shares, or it invests in a combination of all of those things together. So there is an enormous amount of choice available to you when you look at this part of the investment world.
They're making decisions and they're having meetings and they've got big offices and they therefore will have a higher cost base. Now, the big debate in the world is whether the cost base is worth it or not. How do we make that assessment?
So when you're making an investment decision, understanding those costs relative to other funds is very important. So if you buy a fund that costs you 0.75% a year, and there is a fund next door that seems to do the same job but costs you 3% a year, the likelihood is that the fund that costs you 0.75 is going to do better. So that's important. If you buy a managed fund that's trying to beat the S&P 500 index in America, 2 or 3 out of 10 will get that right over a long period of time, and they'll get it right by a big proportion, and they'll tell you their fees are justified. But the rest of them won't. And then the question is whether their fees are worthwhile. So costs are a big thing.
So your one thing to do this week is to look at what your investments are costing you in total. You've got a cost from a financial advisor, no doubt, or from a service provider, and they will charge a fee. Then the unit trust manager, the person who actually makes the buy and sell decisions on your behalf, also charges a fee. You need to add those together, understand what those are, and then go to your advisor and say, how do we do it cheaper? How do we lower the cost of our investments without affecting performance? Because over the long term, even 1 percentage point in costs can cost you millions of rand. Our thought for the week this week from Henry Ford, the founder of the motor corporation that still carries his name. Henry Ford famously said, if I'd asked people what they wanted, they would have said faster horses. So how do you test your ideas? Do you workshop them? Do you take them to a committee? Do you get a focus group involved? If so, how does your idea emerge at the other side of it? Is it better? Or is it worse? Can we in today's world, for example, afford to be as dogmatic as Henry Ford, whose vision led to a mass motoring revolution, the creation of the Model T Ford? You can have any color as long as it's black, he's also famous for saying. Imagine if Steve Jobs had taken his idea of the iPhone to a focus group. 2007, thereabouts, and said, look, guys, I've got this thing. It's got no keyboard. It's intuitive. We don't even get an instruction manual with it. He might very well have ended up with a phone that had a keyboard, and we wouldn't have had the Apple revolution and the smartphone revolution that we all enjoy to this day. Sometimes you have to be brave enough to back your big idea without outside interference. I think that is the point Henry Ford was making. We'd love to hear from you. A short voice note, about 20 seconds or so. Any questions, your comments, your favorite quotes to our dedicated Business Week hotline 072 562 3179. Thank you so much for listening to Bruce Whitfield's Business Week on News 24. Bank better with Business Week and Capitec, the business bank for everyone. Bye-bye.
Capitec is an authorized FSB 4669.